as you say, the tax being plucked out, having been plucked out of the Henry Review in that way and announced on May the 2nd, the RSPT was then incorporated in the budget a couple of weeks later. And the budget showed that the surplus was going to be brought forward from when it was originally going to be in 2015, a couple of years earlier, to 2013-14, largely or partly as a result of the RSPT. Now, in your policy statement last week, in which you were laying down the agenda, as you saw it, for the 2010 election, one of your items, number 9, was fiscal policy, and you're asking for a convincing plan to put the budget back into surplus. When would you like to see the budget in surplus? And if it's the same time as the government, how would you suggest it be done other than through an RSPT?
Well, Alan, I think the timing of getting the budget back into surplus is a little less important than how we get it back into surplus. Our advocacy has been that we should get the budget back into surplus through spending constraints rather than new taxes. That's quite the contrary of what the government's budget was premised on, at least in the out years. So a significant change in the revenue that might have been received from a resource rent tax would mean abandoning some of the spending that was premised on that income.
Like what?
And, even the tax cuts of from 30 to 28% spread over 6 years. Those sorts of things should now be reviewed in the light of the outcome of a renegotiated, reconsidered resource rent tax arrangement. And if there are further expenditure constraints to be imposed, then that would be the best way to get the budget back in surplus. But frankly, it's perhaps a little less important that it be 2013 or 6 months later than it is that we get the right signals for investment back into the Australian economy through getting this tax reworked and revised.
So would you have been happy with the surplus in 2015-16?
Oh, look, as I say, I think how you get there is more important, and frankly the surplus of $1 billion in 2013 is a little bit beyond my confidence level in the margin of error in budgeting 3 years out, given the uncertainties of the world economy right at the moment.